Good evening. It's SM here. I'm gonna be your host, your friend, your brother. Everything that symbolizes love and unity. Alright, so I said something that I was gonna do a video on key levels. So I just wanna do a video on key levels and then combine it with storyline. So quickly, I don't want to spend more time. Probably in the next 30 minutes I should be done. Alright. So quickly. So basically you all know the strategy that I trade, right? I trade S.L.K, meaning structural liquidity and key levels. Alright, so in when it comes to key level, we have just three type of key level. Three types of key level. I don't know, I can't write. So number one, we have the V-shaped key level, a key level that looks like a V. Number two, we have the A shape, a key level that looks like an A shape, and then we have the last one, which is the open close. It's like the gap between two consecutive candles, candle one and candle two. And open close key level as is divided into two. We have the bullish open close and the bearish open close. Alright, so this is where your open close is. The open and the close of these candles. That's where your open close key level is. Alright, so basically a V-shaped key level is supposed to be used for buys, alright, meaning that we are expecting price to come into this key level like this, and then we're expecting it to use it for buys. Yeah, we're expecting it to use this key level for buy. That is basically what it is used for, right? That's basically what it is used for. Why an A-shaped key level is supposed to be used for sales. Yeah, it's supposed to be used for sales. We are expecting price to come into this key level and then we'll sell. You get what I'm saying? Alright. Then we have the let me remove this thing. Then we have the bearish open close. The bearish open close is a key level that is used for sales. Alright. That's like on the basic term, it is used for sales because it's bearish. And then we have the bullish open close. The bullish open close is used for buys, right? And bullish open close is used for buys. Let me see if I can use this. No, I can't. The bullish open close should look like this. Should look like this. A candle going up. And then another candle like this. Then this in between the close and the open is the bullish open close. So it's supposed to be used for buys, meaning we are expecting price to come into it and then we buy. Alright, so this is basically what they are used for until it is proven otherwise. Proven otherwise in the sense that, let's see for an example, this is a V-shaped key level because it looks like a V. So we are expecting price to come into this key level. I will show you chart examples. We're expecting price to come into this key level so that we can buy. Are you getting what I'm saying? So that we can buy. So that we can buy. And then price does something like this. Let me remove this one. So instead of price buying from here, price comes into this one. And break it with an impulsive move. Break it with an impulsive move, meaning that the zone that was supposed to be used for buys, meaning that we will now be flipping it. Are you getting what I'm saying? We are now flipping it for sales. Are you getting what I'm saying? So until it is proven otherwise, it is used for buy until it is broken with an impulsive movement. Same as an A-shaped key level, same as an A-shaped key level. Let me just an A-shaped key level, right? So an A-shaped key level is supposed to be used for buys. Sorry, supposed to be used for sales, meaning that we're expecting price to come into this A-shaped key level and then sell. But once it is broken, we are flipping the chart then using it for sell buy. You get what I'm saying? Just like that. Why the open close? I have two types. I said we have two types of open close. We have the bearish, which is this is the bearish open close. The bearish open close is supposed to be used for sales, meaning that we're expecting price to come into it and then we sell. But if it is broken with an impulsive move, then we can now use it to trade in the direction of which price broke. Are you getting what I'm saying? So also with a bullish open close. Bullish open close, as the name implies, is supposed to be used for buys. Meaning we're expecting price to buy from here until it is proven otherwise, meaning that until it is broken with an impulsive move, then we can use it to push price in the direction of which price broke. Alright, so basically these are the kinds of key level, the three kinds of key level we have, three types of key level we have. Let me show you an example on the chart. So the first one is the bearish open close. Sorry, is the A-shaped key level. Let me remove this thing. The first one is the A-shaped key level. So this is GBP USD on the weekly time frame. What can you see right here? This is what we call the A-shaped key level. This is where price reacted from on GBP USD. It's called the A-shaped key level. So if you want to really see it, you have to go to the line chart. So what can you see? It looks like an A. It's an A-shaped key level. Let me put it exactly at the tip of it. And what did I say an A-shaped key level is used for? An A-shaped key level is used for sales. What the price did, price just came into that key level and started melting. Price started melting, right? Took out this particular liquidity. Just like that. So that's it. Then same also flip the chart. You see a bullish open close. You see a V-shape. So this is how a V-shape looks like. Click, go to the line chart. What can you see? It looks like a V, and it is used for buys. Like I said, it is used for buys. So we expect the price to come into a V-shaped key level, and then we will buy with it. You get what I'm saying? We will buy with it. So let me look for example of an open close. This is a this is a weekly time frame. It's a weekly time frame. Sorry, I need to look for it. Maybe I'll find it on gold. It works very well on gold. It works very perfectly on gold. So look at this zone now. What can you see? You can see two consecutive buy candles. Don't mind my color. This was a bullish candle and another bullish candle. In between the two bullish candles is what we call the open close, the bullish open close. The bullish open close, and where the price reacted from. Price just came into that key level, using this as liquidity, as internal range liquidity. Price swept the zone, and what happened? We sell. So this is like an inverse example. Like I said, if it is broken, you get what I'm saying? If it is broken with an impulsive move, then we can now use it for sales. It's exactly what happened here. It was supposed to be used for buy, although it was used for buy because price came in. Let me even use this. Let me remove this one. I'll use this as an example. What can you see here? price came into this key level. This is the bullish open close. Price coming into this. Don't forget this is a weekly time frame. Where's our target? Our target will be this weekly high. And what happened? Price just the new week just came into our open close and then went into target just like that. Let me look for a bearish scenario. Okay, let me flip this thing, invert this thing right here like this. Okay, that was even a bearish scenario. So it's a bearish scenario. What can you see? Two bullish, two bearish candle. The first one, the second one, the close and the open of the candle, the open close, and where the price reacted from exactly that level. Price came into that level and melted, just like that. What can you see here again? The same thing still happened here. What can you see? This is the zone. This is the same zone. A bearish open close, and what the price did? Price came into the level and melted. Alright, so that's it. That's key levels. And then we have this. I said something that a key level is used for buy. Let's see. Sorry. This is a bullish, this is a V-shaped key level. And I said something that a V-shaped key level is supposed to be used for buys until it is broken with an impulsive move, meaning with a full body candle breaking it. Alright, so we were supposed to buy from here. Then what the price did? Price broke it, and because price broke it with an impulsive move, don't forget, with an impulsive move, then we flipped the chart. We are now using it for sales. And what can you do? Price just came back to that level using this as liquidity, sweeping this liquidity, and what happened? Price began to sell. The same way in a buy scenario. An A-shaped key level is supposed to be used for sell. Sell scenarios. A-shaped key level is supposed to be used for sell. Go to the line chart, we see it as an A-shaped key level. It's supposed to be used for sales. And what did price do? Price broke it with an impulsive move, broke it with a full body candle, and then we flip the chart and then we use it for buys. Alright, the same thing still happened here. Okay, now look at this. Look at something. I want to explain something for you now. So when price broke it, price respected it and went up. Then price came back and broke that same key level again, making this level a plug and play level. We call it a plug and play because price reacted from that. It was a zone that was pushed price before. So making this level a plug and play level. What did price did again? Price broke it again, disrespected it the third time, and then what did price do? Price came back to that key level and then melted. Then for a buy scenario, the same thing still happened. A V-shaped key level that was supposed to be used for buy broken, price used it for sell, came back, broken again, price then used it for buy again. Alright, so just like that. This is still the same thing that happened here. Yeah, the same thing happened here. This is an A-shaped key level again. An A-shaped key level that is supposed to be used for buys, for sales. Can you see it? It's an A-shaped key level. And what did price do? Price disrespected it with a full body candle. And what price did? Price came back, fell into that key level, then using it to the opposite direction. Alright. So that's basically the basics of key level. And when I have time, I will still talk more on them again. Let me show you an example of an open close level that was disrespected. Alright, so basically we all know that a bearish open close is supposed to be used for sales, right? And what happened? Price disrespected it with a full body candle. price disrespected it with a full body candle, what the price came back to that level and then used it for buys instead of using it for sales. Alright, so the same thing still happen. Let me invert it. Alright, so this is a bullish key level that is supposed to be used for buy. Then price broke it with an impulsive move, then came back to it and melted. Same thing happened here. Just go on and on and on and on and on. You're gonna see them. Yeah, I definitely gonna see them. Alright, so let me flip back to this thing. So that's just the basic of key level. Then back to what I was saying. Let me clear my charts. Let me clear this thing. Remove all drawings. Don't mind the color of my charts. Sorry, why do I have to remove it? Yeah, just delete. I think that's all. Yeah, okay, delete. Yeah, I think that's all. Thank God. So I taught you guys on the first way of building your bias using CRT, market liquidity. That's the first way to build your bias. And then the second one is building your bias using liquidity. Using liquidity. Alright, so I said something that you can start from the monthly time frame. Okay, at the start of every new month, you go to the monthly time frame to see how price behaved, how the monthly candle behave, where price is reacting from, and stuff like that. Alright, so but this today I'm going to be starting from the weekly time frame because we are about entering into a new week. So we are just focusing on the week, not the month, because at least this month is already getting to an end. So just focusing on the month. Alright, so first criteria, you already know what an A-shape is, an A-shape key level. So the first thing is that on the weekly time frame, the first criteria you should see is that price should come into a key level. And coming into a key level, we want to see price do two things on the same time frame. It depends on which time frame you are building the bias from. If it is on the weekly time frame, we want to see this on the weekly time frame. If it is on the daily time frame, maybe you are doing a daily to daily storyline, we should see it on the daily time frame. If you are building from the 4 hours, we should see it on the 4 hours. So let's say, for an example, if I'm building from a 4 hours, like a weekly A-shape key level or a weekly key level, the bias should end on a weekly key level. So price move from key level to key level, liquidity to liquidity, like I said before. Alright, so the first thing is that we want price to come into a key level because we are looking for short, right? Come into a key level and close below. Reject and close below. First criteria. See, it's not just enough to reject. Let me make this color a little bold. Yeah, it's not just enough to reject. Rejection is the first thing, meaning that price should come into that key level. Reject, not just reject. The closure, candle closure is very important. So price should close below the level. A rejection and a close below on the weekly time frame, because that's where we are building our bias from. So on the weekly time frame. So what do you do next? You go to one time frame lower. I'm looking for this vertical line. So that's your weekly time frame. Then what do you do next? You go one time frame lower. Since we are building from the weekly, we go to the daily time frame. On the daily time frame, we want to see price do two things: a sweep of liquidity and a breakout. We want to see price give us a sweep of liquidity, and a break of structure, confirming that we are in alignment with the weekly time frame. See, if you are building your bias, whichever time frame you are building it from, at least a time frame lower should confirm what the time frame is saying. All right. So, and secondly, we want to see price give us either this or a breakout. All right. So this is the thing we want to see on the daily time frame, because we are building our bias from the weekly or the daily time frame. We want to see these two things. We want to see these two things. I'll look at something. Let me do something now. I'm not talking about entries, so don't ask me about entries. I'm not talking about entries. So this is what we want to see on the daily time frame. This is what we want to see on the daily time frame, either this or this. So if we see this on the daily time frame, we drop our time frame lower again to the 4 hours. On the 4 hours, we want price to give us a most recent breakout, meaning price breaking out again. This is what we want to see on the 4 hours time frame. This is what we want to see on the 4 hours time frame. If we give us a sweep and a break of structure, while if he give us a most recent breakout on the daily time frame, we want to see a sweep and a break of structure on the 4 hours time frame, because we are building our bias directly from the weekly, right? So we are making sure that all the time frame are in alignment with what other time frames are doing. All right, so this is basically what we want to see. So these are the 4 time frames that I will be focusing on for this class. All right, so these are basically what we want to see. I will still give you a chart examples so that you will understand. I'll give you a chart example so that you will understand. All right, so let me remove all this. Let's clear this. Let's go into the chart. Okay, let me just remove this. Alright, so first of all, we are using this as an example. So what do we say our first criteria is? Price should come into a key level. Price is inside a key level. And because price is inside a key level, what do we say we want to see? We want to see a rejection and a close below. Because we want to say a rejection and a close below, what can you see? Price close here. It was below the line. So this was the close. Let me mark it out so that I can see it when I want to. Change this color to blue and black. So that's it. No, sorry. Let's make it black and this blue. So like this. So I said you will now go to your daily time frame. We are done with the weekly. The daily time frame, we need daily to give us a confirmation. And what did I say we should look on the daily? I said a liquidity sweep and a break of structure. Look at what the daily did. What can you see here? A liquidity sweep, price sweep liquidity. Did it give us a break of structure? Go to the line chart. What can you see? A sweep and a break of structure. This was where the break of structure happened. A sweep and a break of structure. Now daily is in alignment with what the weekly time frame is doing. So we are now fully confirmed that the weekly time frame, the price is going to go bearish, and you get what I'm saying, for a while, which was actually what happened. So we want to look for a place to join into the trade. What did I say you should do? Go to the 4 hours time frame. Go to the 4 hours time frame. And what did I say the 4 hours time frame should do? 4 hours time frame should give us a most recent breakout. A most recent breakout. What can you see from here? Price give us this breakout. This particular breakout. Price give it to us. Can you see? Price give us this breakout. That was the breakout that price gave to us, and immediately after this breakout, what did price do? Price melted. Price melted. Price melted. I'm not talking about entries. Price melted. Price melted. Alright, so this was my target. As at then, this low, sorry, this previous low, this particular one. This particular one. So I can just take my entries from here, go short from like this. Stop loss will just be like 8 pips, and then I'll be targeting the low. So that'll be a nice trade. A nice trade. Yeah. Just like this. Just like this. Just like this. So let's say we wanted to continue. Now we are now fully sure that we are bearish. Then the next day we come into the chart. What did price did on the next day? The price did something amazing on the next day. Price gave us a breakout again. Go to the line chart and see it for yourself. It was a breakout, and because it's a breakout, it's giving us that okay, we are still bearish. Then price engineered liquidity. Price engineered liquidity very close, like this. See, I'm looking at it from the daily time frame perspective now. So let's say we wanted to take a trade from here, from this daily breakout. This was the daily. Let me remove this. Sorry. Let's say we wanted to take a trade from this daily breakout. Unfortunately, price didn't get to it, but we could have seen an entry. Now daily has given us a breakout. Then we want to look for a place to join it. Look for a trade, right? Then daily breakout, and daily breakout, what do you see? 4 hours also had a breakout at the same zone. 4 hours breakout. 4 hours also had a breakout. Not just that he had a breakout, this is what makes it valid, was because he had liquidity close to it. It has liquidity. And then what did price did? Price melted. And where should be your target? Because this is a second entry, and because it's a second entry, we can't be putting our target like, because we are coming from a lower time frame now, not that we are coming from or taking the trade from an higher time frame. So just like this, and then our target will be this external range liquidity, EROL, because price attacks liquidity, right? So this is how the trade would have gone, just like this. It will be an amazing trade, and then price just continues like that. Coming into the chart again, the daily time frame. What did the daily time frame do? Daily time frame now came back into this A-shaped key level again. Price came back into this A-shaped key level. Now we are building a storyline from the daily time frame, and then because we are still, you know why we are going to be targeting this low, this external range of liquidity, because this particular move is coming from a very much higher time frame. It's coming from a very much higher time frame. So price now did our confirmation. Look at this here. So we say price come into a key level, reject and close below. Price closed below, right? Closed below. This was the close of the candle. Let me mark it out. This video is getting too long. I don't want it to be long. This was the close of the candle. Then drop one time frame lower. What do we want to see on one time frame lower? A sweep of liquidity and a break of structure. Did we see any sweep of liquidity and a break of structure here? Yes, this was where we saw it. Was there a sweep? Was there really a sweep here? No, there was no sweep. But what the price did? Price gave us a most recent. There was a sweep. Sorry, there was a sweep here. A sweep of liquidity from here. Then price giving us a sweep of liquidity. Did it actually give us a breakout? The breakout happened. Go to the line chart, please. Where did the breakout happen? The breakout happened from here. Change it again. That was where the breakout happened. That was where the breakout happened. And because that was where the breakout happened, can you actually take a trade from here? If it were to be me, there's a way I could have just take a trade from this particular plug and play level, just taking advantage of the lower time frame. Yeah, that was how I would have just take a trade like this. But can you see? Plug and play. Price didn't even get to it, so let's just forget about that one. Price didn't get to it. Price did not get to it. Price did not get to it. So let's just forget about it. So, although price came into this QM, go to the higher time frame, go to the 4 hours, we'll see what it is. On 4 hours time frame, it's nothing. It's nothing on the 4 hours time frame. It's nothing on the 4 hours time frame. So this one my confirmation entry using an engulfing candle. The candle that price engulfed, so like the close of the candle, we use it as a confirmation entry. So coming to the 2 hours time frame, looking for place to like adjust. Are you getting what I'm saying? So we can place it here, or even at this particular QM. Let's plug and play. Sorry, so plug and play level. Then can literally take our entry from here. If you're someone that says break even, although this trade would have been a break even trade, stuff like that. So now we are coming from a daily zone, like a daily storyline. We are building a daily now, so we can place our target here. And what will happen? Take profit. Are you getting me now? Just like that. Then go to the daily time frame again. Or no, let's just say it start of a new week. Then we'll go to the weekly time frame. What can we see on the weekly time frame? On the weekly time frame, now weekly has given us a breakout. Here. This is where the breakout is. Weekly gave us a breakout. This nonsense. So weekly gave us a breakout. Go to the line chart. That's the breakout. Giving us a breakout. So what do? We expect price to come into a key level. Price came into a key level. This was the key level. It's a QML, whatever you want to call it, or you'd say open close. It's a bearish open close on the weekly time frame. But if you go to the daily, it's going to be a QM. I'm sure of that. So price has now come into a key level, rejected and close below. I told you candle closure is very important. Close below, drop one time frame lower. What do we want to see on one time frame lower? We said a sweep of liquidity and a break of structure. What can you clearly see here? What can you clearly see here? You can see a sweep of liquidity from here. Sweep of liquidity. Go to the line chart and look for your break of structure. Where was the break of structure? This was it. A break of structure. Confirming bearishness, right? Then what the price did after the break of structure, price created liquidity, price came, swept the liquidity, and what the price did, tap into a key level, From here you can take another shot, it's more like a daily time frame. Let's go to the 4 hours, look for extra confirmations, right? So on the 4 hours breakout, we want to see a most recent breakout on the 4 hours. What can you see here? This was a most recent breakout on the 4 hours. And what did the 4 hours candle do? 4 hours came very close. It wasn't close enough, but it was very close. Where was it? It was reacting from this particular candle. Actually, this one. That was where 4 hours reacted from. Although I would have used this as my internal range liquidity. Here. This particular one should have been my internal range liquidity. So I would have been paying attention to this key level here, at which I don't think it get into. It didn't get into it. It did not. So this is where it reacted from. That was where it reacted from. You can actually take a shot from here. Again, stop loss above the high of this candle. Then what do you do again? Target that low. So that's just basically how we would have caught the move, or that is just basically how to build your bias using key levels. So have a nice day.